Morning, guys. It's Thursday, September 4th, 5:24 a.m. Central Time. Grain markets are mostly lower this morning. December corn futures down 0.75 cents at 4.17 and a quarter. November soybeans down 3.5 at 10.28. December Chicago wheat down 5 at 5.17. December Kansas City wheat down 4.25 at 5.06. December spring wheat up 1 at 5.74. USDA had some economic forecasts out yesterday. Why don't we start there?
So U.S. crop receipts are projected to decline this year, while direct farm payments are set to rise sharply. According to the USDA, total crop receipts are expected to fall 2.5% from 2024 to $236.6 billion, reflecting weaker returns for soybeans, corn, and wheat. Corn receipts are forecast to drop 3.7% to $2.3 billion, while soybean receipts are estimated to fall 7.2% to $3.4 billion. Direct government payments are projected to surge 300% to $40.5 billion. On a positive note, cattle receipts are forecast to increase by 15.7% this year due to substantially higher prices, and hog receipts are expected to rise by 9.5%.
With the exception of the livestock sector, this is a pretty dire report from USDA, but it's a lot of things that you guys probably already knew. This was out just yesterday. There were some really good charts and graphics here. We'll start with this: nominal and inflation adjusted U.S. farm production expenses since 1970. Personally, I would ignore that yellow line, which is inflation adjusted production expenses. The inflation data is suspect, to say the least, since COVID especially. And I think that the fact that, corn prices, soybean prices, wheat prices have not really reflected inflation, a lot of people would argue, since COVID. I think you've got to look at the nominal production expenses, which are at all-time highs, essentially. So that's a big piece of the farm doom and gloom puzzle, is that input expenses are extremely expensive. Here's cash receipts, and you can see crop receipts are down, livestock receipts up. Commodity receipts, generally speaking, have trended higher since 2005, but it's been a lot of back and forth. Cash receipts for corn supposed to be down, soybeans down, fruits and nuts, that's not really our crowd. Although, have you seen the comment section lately?
No.
It was supposed to be a joke.
Never mind.
I never said. I didn't say it. Vegetables and melons down a little bit. Wheat down sharply. Cotton about flat. Cattle and calves much better. Milk off a little bit. Broilers, I don't know a damn thing about broilers. Up just a little bit. Hogs up a little bit. Eggs up a little bit. Here's the stuff with direct payments. So let's go back to 2020. 2020, we had a ton of direct farm payments. We had CFAP, which was the Coronavirus Food Assistance Program. And then that's the red bar if you guys are watching for 2020. The orange bar for 2020 was PPP, Paycheck Protection Program. And then we had a lot of that also leaked into 2021. For this year, that big gray bar is $35.2 billion, which is ECAP and supplemental disaster relief payments. The people in the comment section, the trolls and the bots, which we have a lot of lately, they're going to say, it's the Trump bucks. Look at all the damn Trump bucks. They're not Trump bucks. This was all money that was approved before Trump was inaugurated in late 2024. When they do the next round of direct farm payments, which will probably be approved, if I had to guess, sometime this fall and probably sent out in 2026, there's going to be another big gray bar for 2026. And you can call those Trump bucks when they're ultimately issued. So, there's not really anybody out there who's like an official scorekeeper when it comes to farm recessions. But the farm economy is in a recession. I'll be your scorekeeper. We're in a recession right now, and we have been. This is essentially the third year of it. So I don't know if this report tells you guys anything that you didn't know, but it does put some of it into context. And I thought that the graphics were interesting.
In a Truth Social post, President Trump accused China of conspiring with Russia and North Korea during their meeting in China this week. Xi Jinping hosted a major military parade with Vladimir Putin and Kim Jong-un, an event aimed at projecting China's global influence and countering U.S. power. During his speech at the parade, Xi did not directly acknowledge the support the U.S. provided China during World War II, a point Trump highlighted in his post. Despite his criticism, Trump downplayed the parade as a threat to the U.S. He also emphasized his relationship with Xi, arguing that China needs us more than we need them.
This is not helpful to our crowd. The last sentence in particular. Please give my warmest regards to Vladimir Putin and Kim Jong-un as you conspire against the United States of America, President Donald J. Trump. With regard to the Joe Public regular economy, the regular economy is doing pretty damn good. Our farm economy, which very few people care about, outside of the people watching and listening here today, it's less than 1% of the population cares about the farm economy. The farm economy is a different deal. China still hasn't bought a single bushel of U.S. soybeans for now current market and year delivery, and we have no signal or evidence that they're coming. And I still think that they will. I think it's going to be a drastically reduced amount. But you know what? I've been saying that for weeks now, and it hasn't happened. So could I be wrong about that? Yeah, absolutely. If China doesn't step in and start buying beans, or somebody else doesn't come in to replace what they would typically buy, this soybean market is overvalued and could continue to see some additional downside.
If you guys haven't checked out our premium content, you sure need to do so. Joe, can you tell our viewers about some of our recent premium videos?
Brian Split was on yesterday and ran charts. He's the best in the business when it comes to commodity charts. He talked about corn and a possible retest of the spring insurance price, which I know sounds impossible right now because the spring insurance price was like $470. But Brian laid out some excellent context with regard to corn. What else did you guys cover yesterday? I didn't watch the whole thing.
Soybeans, cattle, silver, and gold.
Yeah, the precious metals markets are super interesting right now. Also, we did a fertilizer mailbag with Josh Linville out earlier this week. Josh is the fertilizer guy in the industry and had some excellent stuff. We did a mailbag with him. We had questions that came in from the premium subscribers. They were really fantastic. Shay Folk is going to do some fertilizer stuff for us today. Also, we ran a survey a couple weeks ago, and we asked all of our premium subscribers, hey, what are your fertilizer pricing in your neighborhood? And Shay's got like some maps and some charts, and he kind of lays it out regionally how things look. That one's really good. I watched a little bit of it this morning. If you want to see the premium stuff, go to standardgrain.com. You can sign up this morning. This is a $50 per month subscription. You can cancel at any time. There's no other fee, no other obligation. Nobody will try to sell you anything else. This is content only. I don't want to sell you crop insurance or brokerage or seed or fertilizer. Just emails. That's all we're selling. So sign up this morning, and I'll forward you a copy of this morning's email.
Corn and soybean futures faltered on Wednesday. The December 25 corn contract fell 5 cents to settle at $4.18 per bushel, pulling back from a 6-week high that was fueled by yield concerns tied to dryness and crop disease. The November 25 soybean contract dropped nearly 10 cents to close near $10.32 per bushel, reversing recent support from optimism over U.S.-China trade talks. Sentiment has since weakened as tensions persist and China remains absent from the new crop market. Losses in both markets came despite the USDA reporting a decline in good to excellent crop conditions, with corn rated 2% lower and soybeans down 4%.
I think that the corn market went up. It ran some stops above a trend line and then went back down. Maybe you go down and test this trend support area near 408. I think there's a couple things going on. I think that the U.S. crop is not as big as USDA has led us to believe. I think that yield number, that 188.8, I think most people would agree that's overstated. At the same time, this is still going to be a record crop. It's probably going to be north of 16 billion bushels. And a lot of that crop, the vast majority, has not been sold or priced or hedged. And the farmer does, on average across the country, the farmer does not have the ability or capacity to store everything. And even if they did, they need cash flow. So the forthcoming wave of new crop selling that will probably coincide with the first, several weeks of harvest, that's something that could pressure the market. You could absolutely see harvest pressure, despite the fact that maybe the crop's not quite as big as USDA had advertised in the past. But make no mistake, I think most people would agree, yeah, it's going to be a record. It's just by a question of how much. It's the national yield 181. Is it 183? Is it 179.5? I don't know, but we did it on big acreage, and the acreage situation is not up for debate. If anything, that number moves higher based on the FSA data that we've seen. The soybean chart does not look good to me. We had this kind of like, I don't have it on my screen here, but we had this kind of like pennant thing, and we broke out to the upside, and then it totally failed, and we've fallen apart. Maybe we hold that low from like the lower end of that pennant at 1027. That's the area that you'd like to see avoided today. If you're friendly to the bean market, you want to see a close below that area avoided. So beans in particular, I don't think the chart looks very good.
Polymarket has secured CFTC approval to operate in the U.S. Yesterday, the CFTC granted Polymarket a no-action letter exempting the company from costly swaps, reporting, and record-keeping requirements. The crypto-based prediction market will now be able to legally operate in the U.S. Prediction markets rely on no action letters to operate, trading swaps tied to outcomes such as elections, interest rates, and sports. Outgoing CFTC Commissioner Kristen Johnson warned of limited oversight and the urgent need for clearer rules governing prediction markets. The approval comes only weeks after FanDuel announced its partnership with the CME to launch regulated betting contracts based on financial markets and economic data.
This is appears to be an arms race, and CME is involved. You've got Polymarket involved. They want to do these like essentially government sanctioned gambling is what it is, and it's going to be cleared by CME in this instance with the FanDuel stuff. Polymarket is doing its own thing. So in the past, I said, hey, this CME, I don't like the way that it's going. It's turning into a casino. And I mean, it's always been a casino to some extent, but it's becoming less of a risk management mechanism and more of a casino. And I still believe that to be true. But the reason that they're doing it absolutely has something to do with these other companies like your Polymarkets trying to register with CFTC and get more official, because they're going to provide CME with some competition with regard to these binary bets. That's where they're going to start, but it's going to turn into a whole bunch of stuff.
Shell is ditching a biofuels project in the Netherlands amid a market downturn. The company will not restart construction of its planned Rotterdam biofuels facility due to a prolonged global slump in the market. The project began back in 2022 and was slated to produce 820,000 metric tons of sustainable aviation fuel and renewable diesel annually from waste. A commercial and technical review revealed that the project would not be competitive enough to deliver affordable low-carbon products. Shell had already taken a $780 million hit when it put the project on hold in July of last year. Similarly, last year, BP halted 2 biofuel projects and scaled back others amid rising imports and weaker European mandates that have created an oversupply of biofuels.
Despite what you may have been told, the future of sustainable aviation fuel as it relates to corn ethanol looks very poor. We're still missing a lot of government guidance. We're seeing a lot of divestment. This is Shell divesting from sustainable aviation fuel. We saw Southwest Airlines do the same thing. Just 3 weeks ago, it was announced that they sold an SAF company that it had purchased, Southwest purchased just a year or two ago. So it's the government dragging their feet. It's maybe oversupply in Europe, but in any case, it's not positive as we move forward.
USDA reported a flash sale of soybean cake and meal yesterday. U.S. exporters sold 185,000 metric tons of soybean cake and meal to the Philippines for delivery during the current marketing year. A total of 455,000 metric tons of soybean cake and meal has been booked through 3 flash sales for delivery during the current marketing year.
I'm waiting for that soybean flash sale to China every morning. I'm watching the wire, and it ain't there. Maybe one of these days. What did cattle do yesterday?
Cattle futures were lower. Live cattle were 7 cents to $1.20 lower. Feeders saw losses ranging from $1.40 down to $2.40. Box beef prices were higher. Choice was up $2.59 at $4.16.01, and Select was up $1.56 at $3.87.73.
Outside markets are pretty quiet. The Dow's up 3 points. S&P's up 12. Treasury's up just a little bit. U.S. dollars close to flat. Crude oil down $1 in the October WTI, 62.97 last trade. Have a great day, guys. We'll be back on Friday.